Hello, and joining us on this episode of the Mortgage and Protection Podcast is Paul from Henchurch Lane to explain how using net profit as income works when applying for a mortgage. It's great to chat with you as always, Paul. How's it all going?
It's going very well, Tessa. How are you?
Good, I'm glad to hear that. And yes, all good here as well, thank you. So let's get straight into the questions that we've got here for this episode then. So first of all,
Huh?
how do you calculate affordability when using net profit as income?
Okay, so each lender in the market is going to have a slightly different approach as to how they calculate it. So I will calculate it based on their criteria and how they look at it. And then I'll determine, based on your particular set of circumstances, what's the best outcome.
Mm.
And that's really going to depend on your intentions. So if you need to increase or maximize the amount of borrowing that you're applying for, then clearly we're going to go with a lender who's more generous for your situation. Whereas actually, if it fits with every lender based on your income scenario, we're going to then just be looking to put it with the most competitive option. So,
Mm.
it really depends on what you're trying to get out the back end of it as to how we would look to calculate it or where we'd look to place it. But in answer to the question, every lender is going to have their own approach for self-employed income or self-employed net profit in this instance. So it really just depends.
Okay, well, there we go. Well, that answers that. Let's follow on with this next question then. So, how many years of net profit figures do I need to apply for a mortgage?
Okay, so there is an option in the market. Sorry, there are options in the market where you can apply for a mortgage with as little as one set of accounts. Now, that doesn't mean you've got loads of options if you've only got 1 year, but there are some. So to answer that, how many years do I need? The answer is one, really. You know, in most instances, lenders do look to have at least two, and some lenders will even ask for three. So very small amount look at one, big portion of the market look at two, and then some of them ask for three.
Right, okay, so that's clear there. And actually, that leads us on to the next question. I'm not sure how much you've got to add here. So, do lenders use the average net profit or the most recent year or over 2 or more years?
Okay, exactly that. So
Mm.
very similar to the question above, how do they calculate it? And exactly the same answer, but in a slightly different manner. So most of the lenders in the marketplace will look to average out the latest two. Obviously, the ones that only look at or will take 1 year's worth of accounts, they'll use that figure. And some of them will look to average out three. Now, a little bit more detail in that question that's worth noting is that if you do have two, for argument's sakes, there are some lenders that wouldn't average that out. If it's on a downward trend, they'd actually take the latest year. So if it's going
Mm.
down from year to year, that they're going to use the lower of the two figures. They wouldn't average it out. So that's worth noting. But if it's on an upward trend, then there are some lenders that rather than averaging out the last two, they would take the most recent year. That's on a case by case basis, and not every lender does that, but there are options whereby if you're consistently going up with your income levels, you can argue that it's going to be sustainable, and if you need to take that higher figure rather than the average, that can be an option too.
Right, okay. So, again, something to bear in mind there, and hopefully that's all clear. Let's continue on to this question next. So, how does my net profit affect the maximum mortgage I can get?
Well, it directly affects it, really. So the figure
Mm.
that you arrive at, whether or not you've averaged it out, whether or not you're taking the latest figure because it's gone down or up, whatever that figure is going to go into the affordability calculator, and that's what's going to drive the loan size. So think of it like a basic salary. If you were
Mm.
getting paid 30 grand, you would be able to borrow X amount. If you were getting paid 60,000, clearly that's going to have a direct impact on the maximum loan size that you can get your hands on. So yeah, very, very crucial.
Mm. Right, okay. So, a key pointer there, or key point. So, moving on, we've got two questions combined here. So, can I get different income multipliers based on net profits when applying for a mortgage? And do lenders apply a lower income multiple for self-employed applicants?
Um, okay, so again, all lenders are going to have their specific income multiple that's going to be built into their affordability calculation. Okay, so it
Mm.
really just depends on what lender you go to as to what their maximum multiples are. They're typically, most lenders are going to be in the range from 4 times or up to 6 times a multiple of your income in terms of the maximum borrowing. Most of them fit somewhere between 4.5 and 5.
Mm,
Okay, so it really just depends on what lender it is you're going to. With self-employed, yes, some people do enforce a slightly lower multiple than they would in comparison to someone that was employed. Some don't,
mm,
some do. So again, it's really just going to depend where you need to fit from an affordability perspective. If your only goal is to maximize the amount of a loan size based on your income situation, then clearly you're going to need to look at someone who doesn't hinder you for being self-employed or
mm,
will take the most latest year if that's the biggest figure that you've got. So all of those things are just going to be built into the research.
mm. Yes, makes sense there and explains that. Okay, so people would also like to know then, can you use projected income to get a mortgage?
So you can't use projected income in the actual affordability calculator, which is going to give you the loan size. But you certainly can use it to back up a case in terms of the justification or the argument for sustainability. So in argument's sakes, where I mentioned to you, if you're on an upward trend,
Mm,
can you get a lender to take the most recent year because that's more than it was last year and more than if you averaged out the latest 2 years?
mm,
And a way that you can do that is if you're 6 months into the following tax year, you haven't submitted that set of accounts yet. If that is in keeping with the previous year and shows that you're on track to make that again or more, then that can be used to convince the underwriter that they should be taking the latest year's figure. But they won't take any future income that hasn't been submitted yet because that's completely hypothetical and could be anything when it comes to it.
mm. Yes, okay, so there we go. Hopefully that answers that there for everyone. We've got 4 questions left, so let's move on to this one. Are there any minimum income thresholds for self-employed applicants?
Okay, there aren't any minimum income thresholds for residential applications. So if you're
Mm,
looking for a mortgage where you're going to be living in the property, even if you to earn £2,000 on a self-employed basis, you could apply for a mortgage. But because that figure is what's going to drive the maximum loan size, it just depends on what you're applying for, right? So if you
mm,
need £100,000 and your income was 2,000, it would be sussed out before you apply for it that it wouldn't be affordable, therefore you just wouldn't bother. But there
mm,
aren't any minimum income requirements, as far as I'm aware. There can be minimum income requirements for self-employed net profit
mm,
if you're buying a buy to let. So some buy to let lenders, or quite a few buy to let lenders, actually have minimum income thresholds, and they normally sit around sort of 20 to 25,000 pounds.
mm.
But if you're looking at a buy to let, you are self-employed and you don't have 25,000 pounds income, there are a handful of lenders that don't have any minimum income requirements for buy to lets either.
Okay, so that's useful to know there if that's something that you're looking into. Let's look at this question now. So, are there different requirements for sole traders versus limited company directors?
Mhm. Okay, so documents wise, there are different requirements because limited company applicants are going to have access to more documents that need to be evident. So things like company accounts, you wouldn't have those as a sole trader,
Mm,
and business bank statements that they'll be required from anyone that's applying for a mortgage who is a limited company. Um, Also, it's probably worth noting that your income can be very different as well. If you're a sole trader, generally speaking, you just get profit from self-employment, and that's
mm,
effectively your net profit. So that's the figure that you'll be using for the affordability calculator once the underwriter's either averaged it out or taken the latest year or whatever. The difference with a limited company applicant is that they can actually apply for a mortgage using their share of the net profit within the limited company. And
mm,
that tends to or can be a little bit higher than the personal income that they've drawn. Because they do have access to that net profit, they could take that, they could draw it.
mm.
Some lenders will actually look to use that for the affordability purposes, which can benefit people in a limited company. So definitely worth noting.
Mm, yes, definitely. There we go, a key pointer again there. So another question here asks, if I operate under multiple businesses, how do you assess total income?
Okay, so the easiest way to determine what the income's going to be on an application for someone with multiple revenues is by looking at what's called an SA 302. So a tax calculation will show any earned income. So it will show
Mm,
things like if you've got employment, if you've got dividends, if you've taken a salary from a limited company, or even if you've got rental income coming from buy-to-lets, that would generally all be listed on an SA 302 because that's the document that you submit to HMRC, and it will determine what your tax is for the year. So any taxable income will be on that document. And if we do end up going down that route that I mentioned to you earlier on about the limited company net profit,
mm,
and even if you had 10 limited companies, we would just get the accounts from each one of those limited companies, and we would be able to see the net profit on those. And if you've got multiple businesses, again, you're not necessarily going to choose the more conventional lenders. You might have to go somewhere a little bit more specialist, but it's not a
mm.
problem if you've got multiple streams of income. It just means you need to probably deal with a broker who knows what they're talking about and has been in that position before, rather than, maybe someone that's just used to dealing with employed income.
Mm. Yes, definitely. And actually, you've demonstrated there, sorry, how a mortgage broker can help. But have you got anything else to add there?
Yeah, I would probably just reiterate that point, really.
Mm,
I think the difference between employed income and self-employed income is much greater than a lot of people give it credit for. So, if you go to a GP, they're generally going to be able to give you a very good overview of the market. But if you were dealing with a specific issue, you would get sent to a consultant.
mm,
And that's the difference between a broker who deals with employed income and a self-employed specialist mortgage broker, which is what we see ourselves as.
mm.
So, if you do have a more complex situation, it's definitely worth looking to instruct the right broker, I would say.
Well, a good analogy there, a note to end on. Thank you
Thank you.
for that. Hopefully, that's proved useful to anyone listening to this episode, watching this video. And Paul, we'll catch you on the next episode.
See you soon, Tessa. Take care.
Bye.